Hello, you're watching The Open on BNN Bloomberg. We are tracking inflation with just half an hour ago. The data suggesting inflation fell to 1.6%. That's the slowest pace of price growth that we've seen on a headline basis since February 2021. Now, a lot of that did have to do with lower gasoline prices, but last I checked, that's still an expense for everyday Canadians. Let's bring in Sadiq Adatia, CIO at BMO Global Asset Management. Thanks for joining me, Sadiq.
Thanks for having me.
So what do? We got strong jobs numbers on Friday, and the headline is reduces the odds of a mega rate cut. Now we've got inflation at 1.6%. What does that do to the odds of a mega rate cut?
Well, I think we're still going to get rate cuts. I don't think we're going to get the 50 basis rate cut that everybody was expecting. And I think that's completely fine. I think a slow, steady decline in interest rates is the right approach. I still think that despite we saw the good job numbers and inflation low, Canada's economy is still struggling. And I think the key here is we should stop talking about inflation in Canada because I think it's done. We might get the odd, 1.6 to 1.8 or, 1.9, but we're not going to 5 and 6% inflation. And so we don't need rates the way they used to be a couple of years ago.
Core figures are still at around 2.4, 2.3%. It suggests that Canadians are still struggling because it's not just month over month. I mean, that is getting stacked on top of each other.
I think it's because you're not going to get every component of inflation coming down at the same time. And some are going to be a little bit more stickier, but I think they're still trending towards the downside. And I think even at 2.4, it's not something to really cry, bad about. I think we're, again, trending in the right direction. I think we're doing all the right things. I think now we should be focusing on the economy and making sure that it stays in the right track.
So in betting for a jumbo rate cut, which is 50 basis points, it would seem the Bank of Canada would be signaling that we're really worried about that inflation. We're maybe even falling, and now we're going to be risking deflation.
Yeah, I think that's right. I think if you go with 50, you put up some scares out to the economy and the market, and I think you don't need to do that right now. I think you stick with that 25 basis points, but you be consistent on that going forward. You keep leaving the message on that we're going to be continuing to do that, and the market's going to embrace that. I think the consumers are going to be happy with that scenario. You're always going to get the few outliers that are going to wish you did 50 and went in a little faster. But I think what they're doing right now is the right strategy.
What does this mean for the Canadian dollar, which has taken an abrupt U-turn over the last couple of sessions, was trading as high as 74 just a couple weeks ago, now is at around 72, and of course is lower on the back of this number. Should we be worried about a big drop in the loonie?
Yeah, so funny enough, at the beginning of the year, if you would ask me where we thought, I would have said we were probably closer to 70 cents, given the fact that we were expecting the Bank of Canada cut faster than the Fed. But that didn't really happen. Canadian dollar stayed relatively strong. I think now we're seeing the real impacts of Canada moving faster on interest rate cuts, the fact that we're going to see, lower inflation going forward. So I do think it makes sense that the Canadian dollar should come down lower, and oil prices are lower as well. We've seen a disconnect between oil and the Canadian dollar, but I think you're going to start to see a bit more of that being correlated again.
How much of a different camp is Canada relative to the U.S. when it comes to the rate cutting game?
I think it's night and day, actually. One, the economies are quite different. The consumers are in different health as well. And when you think about the broader situation with the Fed has been a lot more worried about inflation and has been very, very cautious in how they cut. I was actually surprised they did the 50 basis point rate cut. I think they're probably regretting it now that they did it. But to me, they were always being very cautious along the way. They should have gone 25 and continue with 25s. And I think they will do that 2 more times for the remainder part of this year. But I think when you look at the economy, it is a strong economy with a strong consumer, less impacted by higher interest rates than Canadians. And therefore, they can be a lot more cautious in terms of how they cut rates.
Now, we take a look at the markets, and I'm reminded that economy does not equal equity, right? Especially on the TSX. We're talking about an economy that seems to be struggling, and I'm also talking about a TSX that finished at a record high on Friday.
Yeah, I think that the situation is that if the U.S. economy is strong, most other economies just benefit off that, and Canada is no surprise to that either. And so I think when you look through the situation, I think the confidence level, though, around the world is still relatively good. It's probably the most underinvested, strong economy I've ever seen market. So again, there's still some undertones there that might not be as strong. But when you look at how resilient the consumer has been, they're still spending, they're still doing all the right things to support the economy. And I think people forget that we had this big excess savings that was built up that gave us that cushion and buffer along the way to be able to handle higher interest rates. And now that's starting to, go away.
Let's talk about how the inflation trade maybe has been expressed, or the easing cycle has been expressed, has been through gold. And I'm curious how you're thinking about gold right now, especially in the context. I know Canada's inflation in the grand scheme of things doesn't matter, but I mean, is it a signal that maybe inflation worldwide could cool to this magnitude, that maybe the U.S. inflation picture isn't as stubborn as last week's data suggests?
I think you will see each economy a little different when it comes to inflation. I think the trend is lower for sure, but I think the stickiness is going to be a little bit different. And I do think the U.S. is still going to be a little bit more stickier when it comes to inflation. Gold, I think, is a great thing to have in place. We've had it since 2023. It's been a great win for us. But we are starting to take a little profit off our gold trade. And the reason is because, one, the worry of the economy is not there as much as it used to be, so the hedge against that is not there. We still have a strong U.S. dollar at the moment. And then when we think about the movement that we've seen in gold, it just makes us be a little bit prudent to take some money off the table there.
So reducing exposure somewhat, but still keeping...
Still overweight.
Still overweight.
Gold.
Okay,
Yeah.
good.